Hey, it's Walter here, and what you're looking at here is the pound Swiss daily close from yesterday. So it answers the question is how far did the market go today compared to yesterday's close? So I've got over 2,100 data points here, and all I've really done here is I've spread them out on this histogram based on the standard deviation. So it turns out that for the pound Swiss, the standard deviation here is about 101 pips, which is right here. I did this for, as you can see, the Kiwi, the Aussie, the Euro Yen, the Euro Pound, the Pound, and the Euro. So we had a couple of years of data here on these closing prices, and it's fascinating how everything kind of, as you would expect, it kind of centers in here in the middle. Most of the, as you can see, most of the daily closes are between 86 pips lower than the day before and 15 pips higher than the day before. So that's kind of where the majority of them are. Of the 2,101 actually data points, 1,043 were right there within one standard deviation. So then we have 2 standard deviations, 3 standard deviations, 4 standard deviations, and so forth. The interesting thing is this is hilarious. And if you want to take advantage of this sort of thing in the markets, you should click the link below this video. I'll share with you how we do that in the small accounts big profits course. I'm taking a little small $1,000 account and growing it to, over 300 trades to 100,000. That's our goal anyway. That's my goal to do that. But and I'll show you how we use this principle, which is, see here, we're 3 standard deviations away from the mean or the middle here point, and you can see that we have 9 days out of 2,101. Now here's what's interesting about that. We would actually expect that we wouldn't see 9. We would expect that we'd only see 6 out of 2,101, given the numbers being what they are. But here's where it gets even more interesting. This is crazy. There's actually 2 days where the market moved between 900 and 924 and 1,025 pips from the previous day's close. Now, of course, we have like Brexit and Franco-Ged and all that, but those are real days. The market actually moved that far, and it actually did it twice. And what's interesting about that is you would expect that to happen 6 standard deviations, okay, 3, 4, 5, 6. So you'd actually expect it to move between 621 pips to 722 pips once every 1.5 million years. So, which is about, once in the history of the earth. so for it to actually move all the way out here is insane, because that would be like once in the life of the sun or something like that. And it's already happened twice in just the last couple of years. So what this tells you is a couple of things. I'm sorry, it's not funny. I just think it's funny when we build everything from bridges to our Bollinger Bands on math, and it's actually wrong. I just find that fascinating. And so the way to take advantage of this is to hope and pray that the market moves a lot. And anyone who's read about Nassim Taleb or understands the power of this and how you can use it in your trading understands that this is a very valuable tool. And like I said, we're using this in the Small Accounts Big Profits course. I hope that you find this useful, and I hope that it sparks some ideas of how you can take advantage of the market moving further than we ever expected it would, because most traders don't expect it to go very far. Most traders use hindsight bias, status quo bias, and then hindsight bias after that. Status quo bias is that we expect the market to go, about as far as it went yesterday. And the reality is that that's not always the case. Some days the market goes really, really far. And you can see that in the charts here. Look at these charts. Some day, this is a monthly chart, right? But some months the market moves a whole lot. There's the GFC over there. But what some people don't know is the year before the GFC, the market moved quite a bit. And since the GFC, we've had months that have gone just as far. In fact, recently. So the reality is that the markets move farther, faster, and with more volatility than most traders can ever imagine. The key for you is to figure out how to take advantage of that. And I'm sure you can come up with a couple of ways right now. I wish you happy trading. I hope that you can join us in the Small Accounts, Big Profits course. Click the link below to learn more about that. Otherwise, I'll see you in the next video. Take care.